Hey everybody, welcome to September, the September to remember, hopefully in a good way, we'll see. Um, First, real quick on social trade, continue to be very pleased at the regular drumbeat of usage, not only in pages being stacked, but people signing up, and just a lot of cool stuff going up here. It's really exceeded my expectations. For me in particular, the whole reminders thing has been really cool because, wake up and I'll get an email about any particular items that I've asked to be reminded about. This month, especially with all of the events coming up, here's a good example right here. There's just so much happening that I appreciate having these reminders. We can see here that there's a lot of action this week and next. There's the employment report on Friday. There's the ECB event on the 6th, which this calendar says is of medium importance. Maybe Zero Hedge seems to think it's like a big deal. September 12th, German Constitutional Court decision on ESM. And the big kahuna, FOMC meeting right here. So anyway, social trade still very, very cool and very useful. So keep doing what you're doing. It's going well. As far as the markets go, it's like I sort of said tongue-in-cheek, it's like there's a federal statute that forbids a close on the downside. I mean, this sine wave we've been in is just getting ridiculous. We have ever since for a whole month now, nice clean month here, we have just been wiggling between pretty much 1390 and 1410 plus or minus some, and we had this series of higher highs and higher lows. We peaked, it looked like a breakout on the 21st, then we switched to this, I was initially going to say series of lower highs, which we are getting, but we're kind of flat here on the lower end. Indeed, 1395 appears to be a pretty solid floor right now, and the really important one to me is this one down here at 1387.25, because that, if we break it, would call into play this ascending trend line, which is terribly, terribly important. So we've gone from an attempt at a breakout to finding ourselves once again inside this wedge, which has been our prison ever since early May, incredibly. But maybe we'll get back to that. Just really indecisive at this point. The bulls didn't get their breakout. Well, they got it, then it failed. And the bears certainly, between the fact that we're up 160 points on the ES ever since the bottom here back on June 4, and the fact that there seems to be this horrible floor of just powers that be buying pressure going on, can't seem to get past 1385, just cannot seem to do it. But the big news this week and next, I mean, there's just no doubt by next Friday that either the bulls will have completely won the day, well into the fourth year of this market, of this bull run, or the bears will have finally taken charge. The dread fear, I guess, is that for the umpteenth time, Ben says he'll do his darndest, and we will still have this sort of Damocles dangling over our heads. It's perverse, but I want so badly for him to just announce the goddamn thing so we can stop talking about it. Living with this uncertainty blows. As far as crude oil goes, we had a sell-off earlier today. Initially, it started off strong, then it really flopped over. A lot of my shorts were sort of kind of in the commodity realm. This was one of those days where I was up really nicely, and then I found myself in the red, and I closed with a small profit. I mean, I'll take a profit, thank you, particularly in light of the fact that the small caps just exploded higher today. But still, it's just disappointing because you see a nice fat profit, and it gets chipped down and into a loss, and then it ends the day with this, very modest profit. It's just kind of, is this worth it? But here's the trend line on crude oil, which did get broken and challenged, and we're still beneath it here. So it looks like the bull in crude is starting to definitely show signs of aging. Precious metals bugs had another terrific day. We're well above the trend line here on gold, and silver in particular did extremely well. Don't let this negative sign fool you, because I'm recording this well after market hours, so it's reflecting the new day's trading. This was like a 3% gain for Tuesday, so a very, very powerful day for our kook friends. In spite of that, in spite of big strength in gold and silver, the miners still weak, down over 0.5%. Very encouraging to me, because if the miners can get limp in the face of strong metals, well, goodness, what will they do in the face of weak metals? The NQ also, I guess for those adept enough, this is just a bonanza of a market, because you can play these giant 40-point ranges. This was one, but this one's more manageable, because this sucker was crushed in the span of about an hour. This was a little more languorous. We plunged from about 27.82 down to 27.50. Actually, much below that. The low for the day was like 27.43, and then zoom back up to the 80s again. So I'm sure some people got killed, and there's some lucky chucks out there who did great. This is a very interesting range we're playing, particularly in the NQ. As I'll just mention in passing, those of you probably saw my post before, that one nice winner for me today was ARMH. This fell nearly 9% today on good strong volume, and this is just a very clean pullback to this broken triangle. I love these. I love when things do what they're supposed to do. Very clean pattern there. I'll also make mention that my old buddy Cliff Natural Resources, CLF, this giant topping pattern is still doing a yeoman's job of falling, closing near the lows again on strong volume. So just very handsome topping pattern, classic head and shoulders action. The handful of bullish items that I've grudgingly kicked out there are still doing pretty well. AIG, very pretty cup with handle, fulfilling pretty nicely there. HCC, I'll back this up to a 10-year so you can see that a little more clearly, a 10-year daily push to a new lifetime high there. MDT, these are all some things I've shared with you before, up 1.35%, cutting above that pattern you see defined by these trend lines. A nice push above resistance. PPL, very good looking multi-year range being set aside with nearly 1% gain. And SNI, Scripps Network, up over 2% on this one. So even though I'm not trading them, I'm strictly short. The long ideas I've kicked out there are doing pretty well. Currently, just as far as my own portfolio, I have 64 short positions, all of them teeny, which is kind of de rigueur these days, I guess, with all this big news looming. I don't think I'm going to take any large positions on. So 64 little fellas. The ETFs among them, since I don't quite remember, I'll just pull them up right here. The ETFs, just a couple. I've got DBA short currently, as well as XLE. Pretty good looking pattern there. But those are the only ETFs that I've got. I still have my GDX puts in my options account, but I don't have any GDX in my big portfolio. And the last chart continues to be a fascinating one. ZB, the Treasury bonds. Actually, we're into the December on this now, ZBZ. We have mashed right up against this trend line, and we will see if we succumb to that as resistance and fall away, or if we muscle past it, in which case the trend line will kind of be rendered a lot less important. So anyway, I don't know how much this Europe news will move things on Thursday. We'll see. The jobs report is kind of the last big economic data point for the Fed next week. So perversely, the worst news for the bulls would be a really strong jobs report. So that it's kind of the upside down market we're in. If in this sick economy, I doubt it's going to happen. But if there's a good strong jobs report, I think that'll really splash a lot of cold water on QE3 dreams. But we're going to have to take this a day at a time. Hopefully by next Friday we won't be too bloodied, and maybe we'll even be victorious in a way. But the smoke will definitely be cleared no matter what the outcome. That will do it for me, and I thank you for your attention. I'll see you on Wednesday.